Most of us learn precisely the strategies and techniques that make it easier for our opponents to win over us in the markets. They know if our positions are net long or net short, and they know exactly where we are placing our stops. More than 90% of us falls in this very predictable category. To alleviate this issue, we must start thinking outside of the box. As a beginner, we all start looking at charts first. We're looking for the best strategies, and we're looking for our edge inside of a chart. What I want to do here is a different approach, outside of the box approach. I want to try and implement some of Sun Tzu's ancient teachings, the discipline that we in modern times use to help us get ahead in culture and politics and business and sports. I believe that if we implement some of Sun Tzu's techniques in our trading strategies, we will succeed more often than not. We will see success over a series of trades and not only on a trade-by-trade basis. Know your enemy as well as yourself. This quote from the book forms the basis of Forex 101, not taught anywhere else. So know your enemy as well as yourself. We know that trading psychology is critical to the success of any trader. It teaches us to understand ourselves, and it shows us how to manage our emotions like fear and greed. Many good books on this subject delve into risk management under this same heading, the heading of trading psychology. They link risk management under the same topic. So trading psychology as a subject, it even reaches a higher level when it endeavors to explain the ego and the role it plays in holding us traders back. But still, I wish to tackle the problem from another angle. I want to stress the importance that knowing your enemy is as important as knowing oneself. Going beyond trading psychology and looking into the psyche of our competitors. It is us versus them. If we look at the sporting arena, or any successful business owner knows who its competitors are. A successful athlete studies the strengths and weaknesses of its opponents. Every endeavor where we face a potential loss, we tend to make every effort to know our opponents in that arena. We should do the same in Forex trading. We can't expect to succeed against our opponents if we don't study them. We are participating in the biggest and the fastest growing market on earth, $5.1 trillion per day turnaround or turnover. It's not enough to implement trading psychology techniques on ourselves only. We need to understand the psychology of our competitors. Know your enemy and know yourself, and you will not need fear the result of thousands of trades. The outcome of 1,000 trades you will not need to fear. And when you remove the fear, that's when you see success. So who are our competitors in this market? Our competitors are big banks and hedge funds, large corporations, and even world central banks. Those are the retail traders' opponents. They are the toughest competition out there, and seemingly they have the power and the will to move markets as they wish. Whenever a trader has taken a losing position in the past, more often than not, it's one of these guys that has actually taken the opposite side of the trade. Don't get me wrong here. There are no real enemies here. I don't even see the broker as an enemy, as without the services they provide, retail traders won't even exist. This is a beautiful market, and it will not live without each and every one of its players. I'm merely suggesting that we study our competition and find out what their capabilities are and scrutinize their strengths and weaknesses. And in that way, we will gain an edge in the market. So knowing yourself is only 50% of the battle. The other 50% is knowing your opponents. When the Swiss National Bank reassured the market that the Swiss franc will remain pegged to the euro and the value of the euro will not drop below 1 franc and 20 rappen. A few days later, after that reassurance, the peg was released and the euro fell as the forex market has never witnessed before. Look at this chart, for instance. This line here is the line that the Swiss National Bank said will not break. This is the 120 franc per euro line. Throughout this period, it reassured the market that they will hold and buy up euro to keep the price above 120. So, I mean, the traders in the market would all be watching this level and obviously start buying and then placing their stops just here. Very, very obvious stops. Thing is, what happened next? It was the greatest stop hunt that I've ever seen. In a matter of minutes, 2,500 pips wipes out brokerage firms, hedge funds, and retail traders. Only the banks came out on top in this one. It was a cloudy day, even though I didn't have any positions affected by it. But for those traders who were afflicted by this event, most of them called this nothing less than daylight robbery. Some of them who managed to re-enter this trading arena vowed never to trade the Swiss franc versus the euro again. Yeah, so it makes me question whether the Swiss franc is still a proper safe haven, but that's a topic for another day. This is an example just to give you an idea of the capabilities of the bigger players in the market. Yeah, just watch out for this and know what they are capable of. Congratulations on staying to the end. Only 1% really do. I'm trying to keep the good stuff until the end. It's also a great way of filtering out those seeking immediate gratification. I mean, this is Forex 101. We're all expecting some charts. But for those of you still watching, I will explain a theory of how we as retail traders could exploit a shared weakness that's shared between these big banks and large corporations. They all have the same weakness, and I will share that next week or next time. Start at the beginning, guys. I know we all expect looking at charts and looking for trading strategies from the very beginning, but this is Forex 101. Think outside of the box, guys. Bye-bye.